Accounting cycle. 1. Identifying and analyzing the events recorded. 2. Recording transactions in the journal. 3. Posting journal entries to the ledger. 4. Preparing the trial balance. 5. Preparing the worksheet and the adjustments entries. 6. Preparing the financial statements. 7. Journalizing and posting of adjusting entries. 8. Journalizing and posting of closing entries. 9. Preparing the post-closing trial balance. 10. Journalizing and posting of reversing journal entries. Learning objectives. Familiarize oneself with the accounting cycle. State and apply the rules of debit and credit. Analyze the transactions with the use of the debit and credit T accounts. Journalize transactions in the general journal. Post the journal entries in the general ledger. Prepare the trial balance and appreciate its use. The double entry system of recording transactions. Accounting transactions are recorded using the double entry method. Every transaction affects at least 2 accounts because of the dual effect of the transaction. There is a matching credit. For each debit, accounts must be credited in full, equaling the amount of all debited accounts. This are the example of the double entry system of recording transactions. Identifying and analyzing the events recorded. Locating and evaluating the transactions that should be documented in the business records. Business documents are forms that provide data to back up a transaction. These give information on the participants to the transaction, such as the exchange's date, time, and the monetary value. Recording transactions in the journal, also known as journalizing. This is the process of recording the transaction in the first book of account known as the journal. Posting journal entries to the ledger, also referred to as posting. It is the process of entering the data from the journal into the ledger, the book of final entries. The ledger summarizes the growth or decline of each account. Preparing the trial balance. A trial balance is a list of the accounts in the ledger along with their balances or sums. These demonstrates that there is a corresponding credit for every debit. Additionally, it indicates the balance of the ledger. Preparing the worksheet and adjusting entries. A worksheet is a common tool that accountants use to gather all of the information needed to prepare the financial statements. Adjusting entries, closing entries, and post-closing trial balance on a single sheet of paper. Preparing the financial statements in order to provide parties interested in the business's financial information with useful information. For financial statements should be prepared as statements of cash flows, financial position, and income statement, and a statement of changes in owner's equity. Journalizing and posting of adjusting journal entries in order to update the accounts for internal transactions that have an impact on more than one accounting period. Adjusting entries are created at the conclusion of the period. Journalizing and posting of closing trial balance at the conclusion of the accounting period. Closing entries are prepared to update the owner's capital account. Nominal accounts balances will also be cleared out by this to make them ready for the next period. Preparing the post-closing trial balance. After the closing entries have been posted, the post-closing trial balance is prepared from the general ledger accounts. This is necessary to assure that these entries have been correctly posted.
you.